Hey everyone, welcome back to Corporate Decoder. Today, L.E.G.T just filed a current report detailing a major shareholder vote, and I am seeing some interesting signals about the company's future. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is pushing forward with a significant business combination, and the shareholder vote results are in. This report from Legato Merger Corp, the third, ticker symbol LEGT-U, covers events that happened on the 4th of June 2026. It is all about a big meeting where shareholders got to vote on some very important stuff. Think of this as a current report. It is filed when significant things happen that the public needs to know about, pretty much right away. This is the company we are looking at. They are incorporated in the Cayman Islands. Their securities, the units, ordinary shares, and warrants are traded on the nice American stock exchange. This tells us it is a publicly traded company whose shares are available for anyone to buy or sell. They've checked the box saying they are an emerging growth company. This means they can take advantage of certain rules that reduce reporting burdens, giving them a bit more flexibility as they grow. This section is the heart of the filing. It tells us exactly what the shareholders voted on and what the outcome was. Let us break down what this all means. Legato Merger Corp, the third, was in the process of a business combination. This means they were planning to merge with another company, Einride AB, which is based in Sweden. The idea was that Legato Merger Corp, third, would merge into a subsidiary of Einride, and then Legato shareholders would become shareholders of Einride. This is a common way for private companies to go public through a SPAC or special purpose acquisition company like Legato. The company held a special meeting on the 4th of June 2026, where shareholders were asked to vote on 4 main proposals. These votes are critical for the merger to move forward. First, they had to approve the main business combination agreement itself. This is the big picture deal. It includes the agreement signed back in November of the previous year and all the other related documents needed to make the merger happen. Shareholders voting yes here means they are saying they like the deal and want it to go through. Next was the merger proposal. This is about the detailed plan of how the merger will actually be carried out legally. For a company incorporated in the Cayman Islands, this involves filing a specific plan with the registrar. This proposal essentially approves the mechanics of the merger itself, ensuring the legal structure is in place. The third proposal was about the company's governing documents. When two companies merge, their foundational rules, like their articles of incorporation, often need to be updated to reflect the new structure. This proposal asked shareholders to approve these changes, though it was on an advisory basis, meaning it was more of a recommendation. Finally, there was an adjournment proposal. This is a pretty common one. It allows the meeting to be postponed if more time is needed to finalize things or get all the necessary approvals. It's a fallback option to ensure the process can be completed smoothly. To make sure the votes counted, a quorum was needed. As of May 7, 2026, a total of over 18.6 million shares were represented at the meeting. This is important because it means enough shareholders participated to make the results official. A quorum is basically the minimum number of voters needed for a meeting to be considered valid. Now, let's look at the actual vote counts. This is where we see how the shareholders felt about each proposal. For the business combination proposal, the vote was 17,975,925 in favour, 712,758 against, and 0 abstentions. This is a strong endorsement. A vast majority of the votes were in favour of the merger. This shows that most shareholders are comfortable with the deal and believe it is in the company's best interest. The merger proposal received the exact same vote count, 17,975,925 for, 712,758 against, and 0 abstentions. This is also a very positive result. It means that the shareholders are not only in favour of the business combination itself, but also the specific way it is planned to be executed. And the organisational documents proposal also saw the same voting pattern, 17,975,925 for, 712,758 against, and 0 abstentions. Even though this was advisory, the overwhelming support indicates shareholder confidence in the leadership's plan for the company's future structure. Since all the essential proposals were approved and a quorum was present, they did not even need to hold a vote on the adjournment proposal. The one that allowed for postponing the meeting, this signals a smooth and decisive meeting. So what does this mean in simple terms? The shareholders have given a clear thumbs up to the merger. This filing is essentially confirming that the company is moving forward with closing this deal. It's a big step towards Legato Merger Corp, third, completing its business combination with Einride. The report is dated the 5th of June 2026 and signed by Gregory Monahan, the Chief Executive Officer of Legato Merger Corp. The third, looking at the external context, Legato Merger Corp, the third. Units have traded recently around $17 with a 52. Week range between $10.3 and $18.75. This indicates a decent performance in the market, likely reflecting the anticipation of this merger. The news headlines from the 6th of June 2026 mention that Legato shareholders approved the business combination with Einride, which aligns perfectly with what we are seeing in this filing. From a strategic standpoint, this vote is crucial. For SPACs, getting shareholder approval for a merger can often be a hurdle. The overwhelming support here suggests that the terms of the deal are appealing to the shareholders. Or at least there is strong confidence in the management team's ability to execute this combination. The lack of broker non-votes is also interesting, suggesting that most shareholders who could vote did vote. However, it is worth remembering that shareholder approval is just one step. The completion of the merger still depends on various closing conditions outlined in the business combination agreement. What I am actually looking for is how Einride performs post-merger. The success of a SPAC deal often hinges on the future performance of the combined entity. We will need to keep a close eye on Einride's financials and strategic execution once the merger is finalized. The risk I am watching is the ongoing success of the merged entity. Many SPACs struggle to meet initial projections after merging, and the market often punishes them severely. A comparable would be companies like Tupperware or Rite Aid, which have faced significant challenges post-merger or in their business trajectory. While this is not a direct comparison, it highlights the importance of post-merger execution for companies coming out of SPAC structures. Alright, that is my take on this Legato Merger Corp fee filing. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis helpful, please like and subscribe for more deep dives and join our Discord community in the description below.